Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Saturday, November 22nd, 2014. We're going to take a look. This is the weekend edition. We're going to look at the markets like we usually do, daily and weekly basis, indicators, ETFs, and today I'm going to look at the top three percentage winners of the stocks I follow on Friday, and the top 3 percentage losers of the 37 or so stocks I follow on Friday. So we'll take a look at those. All right, we're going to start off here with the Dow Industrials, up 91 points, explosive morning. Let's zoom in a little bit and then we'll zoom back out. Explosive morning, a huge opening, huge rally, and then it sold back off. At one point it was only up 50 points and then it rallied back up. So this market is continuing to move to the high side, and you know, as they say, when Mr. Market talks, you better listen. So right now, I got to say the market is telling us that it's not wanting to go down. So when you look at this on the indicators, what's happening is where we were starting to see some potential bearish divergence, that's going away. Okay, so if it's not there, it's just not there. And right now it's basically disappeared. So you got to sit back and say the market is in bull mode. Now it's had one heck of a move in here. So because we had this ending diagonal back up in here that was ending in September, and we thought, okay, it's collapsing down, or I thought it was collapsing down and breaking down out of this ending diagonal. Thought it was the end of a move, the whole setup, and look pretty bearish activity. But then the fact that we've broken back above that level, you really have to revisit the scenario now and say, okay, what have we got going on? And I really, when looking at the S&P 500, it's what really helped me get a better perspective. I went back and said, okay, let's just recount and look at everything since March 2009 and see what we've got. And my best assessment is that we are in a 5-wave move up since March 2009. We are in we talk about, motive waves up and then corrective waves back down. You talk about a 5-wave sequence up and a 3-wave down. Right now, we are in what I would call primary wave 3. Okay, we had 1 and 2, and let me go back. Coming off the low of here, March 2009, we had primary wave 1, primary wave 2 pullback. And then we started getting a lot of this overlapping kind of stuff. So because it's overlapping, you have to get into this 1-2, 1-2 type of account. So right now, we are looking to complete a primary wave 3 up, and it's been extended, it's been long. And right now, we're in the 5th intermediate wave, because this collapse back down here that we just experienced is an intermediate wave 4. I believe we're in the 5th wave of that primary wave 3 up. Now, when that completes, what does that mean? That means that we'll get primary wave 4 back down, and then one more primary wave 5 to the upside, okay? Now, primary wave 4, when we finally get this one complete, primary wave 4 is going to be usually the opposite in terms of the type of form of primary wave 2. And notice how wave 2 was kind of a zigzag back, and let's see how deep it really was. When you look at this, I think it was fairly shallow. That's pretty close. It wasn't even 38% retracement. So my expectation is that when we finally get into corrective mode here, once we complete this intermediate wave 5, which will get a let me see if I can write that up here. So what we're going to do is we're going to get this 5. We'll have little brackets around it. That'll be intermediate wave 5. That will then give us, because I can't do circles on the thing, I would do circles for primary waves. That's going to give us primary wave 3. Okay, that's going to be up here. All right. So I'm going to take that off, go back to my mouse, and now I'm going to zoom back in a little bit. Now let's take a look. So now I tried to do some Fibonacci projections and also looking at wave counts. Wave 5, intermediate wave 5 will equal intermediate wave 1 at 18,572 right in here. Okay, need to pull that back a little bit, right in here. That's where, since wave 3 extended a lot, then usually the other two waves will tend towards equality, all right? So right now that would be 18,572. The first projection on a Fibonacci projection, the first target after that is 18,815. So that's the upside. Now the challenge is trying to make some sense out of any kind of wave count we got in here. The problem is we're not getting much of a pullback. So if you look at the fifth wave of primary wave 1, let's go back to the end of primary wave 1. Back here, you could see that this fifth intermediate wave, it also rode pretty much above that blue line, the 10-day exponential, and really didn't pull down underneath it much until it was ready to correct and go and start correcting, and ended the fifth wave. You did get a little bit more of corrective action in here though, one little pullback and then sideways, which is why I'm surprised that we're not seeing that. We got a little bit of a pullback here. Okay, let me zoom back in. Got a little bit of a pullback here, and then, you know, maybe some, you could count this as maybe a sideways wave 4 or something. I don't know. It's really, really hard to count. But again, it's above the 10 and just riding. All right. So that's my best assessment of what's going on with the Dow. The S&P is going to be a similar type look. Let me give you a similar type count. Same thing. I think we're in the fifth intermediate of the third primary wave. And I'm going to come back to this when I look at the weekly chart and tell you why I'm now a little more convinced that we're in this five wave move up. All right, here on the S&P, here's where wave, what am I saying? This is the 5 equals 1. Here we go. 5 equals 1 at 2154. All right. This one is... this is more of a, this was a Fibonacci projection of from primary wave 1. So this would be my first target. 200% of primary wave 1 is where primary wave 3 will equal 200% of primary wave 1. It's about 2118. Okay. So about 2118. And now the next target would be 2154. And after that, the Fibonacci projection is 2206. So these are the targets, 2118, 2154. These are the targets I'm looking at on the S&P 500 cash, and then also trying to watch the wave count to see how it sinks in with this, and divergences and indicators to see, you know, are we getting close? Are we getting there? So, you know, we're off in this virgin territory right now, and this is the way it looks at the moment. NASDAQ, again, you know, this is the look on the NASDAQ for the day. The indicators. Again, the divergence is going away a little bit on the demand index. Not quite as clear on the DI plus, but it's slightly higher. It's still not showing up. Still got a little bit of a negative divergence on NASDAQ on the RSI. So NASDAQ's still doing something a little bit different in here. You can see how it opened way at the top end of the range for the day and then just sold off and closed down here. I actually thought it might reverse yesterday, but it just didn't do that. So again, another sign that it's just so bullish. And the New York Composite, the divergences have gone away. New York Composite's divergences have gone away. So I would not be surprised to see the New York Composite now push to new highs to get in sync with the rest of the indices. Russell 2000, it's continuing to lag. It's not pushed up above. Am I looking at... Yeah, I'm looking at a daily. Okay, I've also got a weekly to take a look at. All right, we looked at the S&P. Let's look at the Dow weekly real quick. Okay, so the Dow weekly, the divergences have gone away here on the RSI, and there's no divergence on the DI plus. Okay, the indicators are pushed higher along with the push of the market. So, you know, the market's going to do what the market's going to do, and you know, that's you know, there's nothing you can do about it. You just have to adapt. Okay, I mean that's the word you got to use. You've got to adapt. And so when I look at the Dow on a bigger basis, this is my best assessment of what I think is going on. You know, given what we're acting now, 5 waves up and that type of thing. I think we're in a primary fifth wave, fifth of 5 wave moves coming out of the Great Depression down in the 1930s, okay? And I've shown that chart before, okay, all the way back down. The wave counts are very clear. And I think we started in here. This is a natural, the 1987 crash is a natural wave 2 pullback. Sharp, quick, okay? Then we got this extended strong wave 3 up in here, year 2000. Now I think we got some kind of ABC flat correction with the C wave being a very strong 5 wave down that occurred in 2008 into early 2009, 4th wave, and now we're in the 5th wave, completing the 5 wave cycle up. And so we are in the 5th and final wave up. Some people think we're in a brand new big bull market, but this never corrected enough, okay? It never, in my opinion, based on the way the chart's looking. So the S&P 500, I wanted to look at this on, okay, this is a weekly basis. I'm gonna take a look at this on a weekly basis, pulling us back. Here's the other thing with this. I mean, you can see this is more bullish scenario, even the Dow chart looks like, because the 2007 here on the S&P really didn't, it barely went higher than the year 2000, okay, as opposed to what the Dow Industrials did. So it looks even more like kind of an ABC flat type correction. And then we got this, 5 wave move that's going on. So that's why the 5 wave move now seems justified and seems to be in sync with what we're seeing. Do I have the NASDAQ weekly? I think, yeah, we're still seeing some divergence here on the NASDAQ weekly. Okay, so that hasn't gone away. So it's a little bit of a mixed, we're getting mixed signals here though. On DI plus, it's still, it's gone away a little bit, but it's not on the demand index. So on DI plus, the divergence gone away, but it's not gone away on the RSI. So a little bit of mixed signals on the indicators on this. We'll have to continue to watch. Again, it's kind of tight in here, just like the Russell 2000. So we're getting, continuing to get mixed signals. Let me pull up the Russell 2000 weekly and you'll see what I'm talking about. These little doji bars, again, this is a week. This is, we basically closed right about where we opened for the last 3 weeks. That was the action. It's like up, down, you close right where you open for the week. So we're right at this trend line again on the Russell 2000. Okay, let's take a look at some of the indicators now. The short-term trading index. All right, we are starting to get a little bit of a, an extreme reading. Okay, we're down here below 0.9, just like we were back on September 15th. So I tell you what, if we continue to push up, like the S&P 500 gets up around 2118, a little bit higher, I could see this, really starting to get at an extreme. I mean, we'll just have to see if that's what happens or not. The VIX. The VIX is sold back off. Again, we're not getting, it's not turning up. It doesn't look like it's setting up for a run for higher. So that's the one thing that kind of gives me pause too, that, for any kind of bearish scenario right now, the VIX is not telling us that it's looking or acting like it's ready to go higher. And the VIX goes higher when the market goes down, okay? The next one is high-low. The high-low, we got a pop back up on Friday with this move. 203 more net new highs for the year versus new lows. Pulls us back up above these moving averages. And so, again, it's not continuing the breakdown mode. So it's kind of potentially, we'll see how the next couple of days go, but it's potentially breaking out of that scenario. The next one is, I'm going to look at the high yield, if I can find it. There it is. High yield bond fund. This has rallied up kind of like what it did back in here before the market peaked on the 19th. And again, I talked about the number of days after the moving averages crossed. We'll see if that continues to happen, whether it continues to pull back down or not. We've now had 2, 4, 6, 7 days since moving averages crossed. The way this market's moving, I mean, it wouldn't take much to get some points put on the board. Let's see. The last one I wanted to talk about indicator-wise is the put-to-call ratio. Okay, so this is my Excel spreadsheet where I keep the put-to-call ratio. So we're getting some very bullish readings which are bearish. Okay, sentiment is opposite. Okay, so extremely the amount of puts versus calls, 49 out of 100, 0.49. Okay, and 0.47. Whenever that gets below 0.50, I highlight it in dark, very dark red, blood red almost, or darker. And the 10-day moving average is this column, okay, and it's at 0.57. When it gets below 0.55, I start highlighting it in red, like we're in an alert scenario. This hasn't happened back. You go back to June, and the June scenario before the July peak, and then, you know, again, and the July September peak. This is what started to happen in terms of the bullishness in mid-June, okay, and prior to that, it was this kind of bullishness that happened at the end of December and in early January, prior to that peak and sell-off in January. So that's what I'm monitoring right now. I don't see the 10-day moving average, you know, getting that low yet, but it looks like it's getting close. Okay, so that's it on the put to call ratio. All right, let's jump in and take a look at these stocks real quick. Let's take a look. The top 3 percentage gainers for the day yesterday of the stocks I follow. Number 1 was Jinko Solar. So Jinko Solar had a big move. I mean, it's trying to turn up. We'll see whether or not this correction has completed down here. My read on this was that third primary, we're doing some kind of complex sideways correction, fourth wave. So it's gonna try to get launched and going on a fifth wave here soon. This may be it. It's just really hard to tell. Let's see. The next one, Caterpillars, number 2. And Cat had a pretty good move today, or Friday, up $4.36. And again, you know, it's coming on up, and we just it's not at a new high. It's not taking out the high yet. Let me back this out a little bit. See if I can get a little broader perspective. Well, it's hard to get a picture as to what is really going on, except for the fact that, like the market, it's had a big snapback move in here. Yeah, let me look at the indicators real quick. Yeah, I mean, there's no divergence. It's definitely moving up, you know, moving up nicely. No divergence on the RSI, DI plus, DI minus, nicely. Demand index up strong. Volume was great. So, I mean, this looks like a really solid move. It's just not one, you know, this isn't, I look for more of a setup to jump in on. Probably the time to have gotten in when maybe been the close on Thursday. Yeah, we'll continue to watch it. Anyway, this, you know, I'm pulling them up because they were the biggest winners, not necessarily because I'm saying that there's anything we ought to do with them. We are checking them out. All right, let's look at Melco Crown Entertainment. And that's the next one. Now, this one still looks like, you know, it got a big pop in here, but it just looks like it's still chopping. And it's almost like you could make a, you know, draw a line down here and draw a line. And it's kind of in this little bit of a trading range. And we'll see if it breaks out or not. It's kind of in a little bit of this box. And the, you know, the moving averages are kind of overlapped in here, tight, and they're all very, very close in here. So we could get a move, and we'll see if it sets up something a little bit. But those were the 3 big percentage winners. The losers for the day were Delta Airlines and United, Continental, and Expedia. So now, what's interesting here with Delta is it's pulled back below the 10. But this move, I think we're in a fifth intermediate wave. I mean, look at the big third wave that it had. I mean, it's just a huge move in this channel. So we're in a fifth wave. The real question is, are we running? We are potentially at Fibonacci extension top in here. That's a possibility. But because this is so strong, let's take a look at the ADX. Okay, so this could be, we got a little bit of divergence. This could be pulling back to nothing more than the 50 and 40. For that matter. I mean, this could be starting to set up for another push to the high side. you know, see the little the light line, small line here, that's the ADX, the average directional index. And so that's sitting at right about 32. So it's in a strong trend mode. And all the moving averages are aligned, 10 above the 21, above the 55, above the 233. So right now, given the strong trend, given what's going on, and given the way the market's acting, I mean, we'll have to see. I'd be looking to see if maybe this wouldn't set up for another pop to the upside. It's not strong enough divergence, and there's no other scenario for it actually in terms of, you know, some kind of pattern telling me that it's going to come down. Now, United Continental is a little bit more bearish in terms of the divergence in here. This may be a little bit different story. Although the moving averages are all aligned in here, let's take a look at... Now, ADX is not nearly as strong. You see where it is? It is right around 23. And DI plus is above DI minus still. Demand index is dropping, and we got divergence on the demand index. So now we've got a divergence scenario on United Airlines. So much stronger divergence scenario than on Delta. And the whole bullish mode, I mean, remember Delta was in that strong channel, and this United has basically been going sideways. So not nearly as strong a scenario, I don't think, as Delta. So this may be one that could be getting ready to roll over. I'll have to take another look at it. And the last one we're going to take a look at today is Expedia. There it is. And Expedia was down for 2 days in a row now below the 10. But I'm going to hesitate to be taking a position on this because this position with what I call a WR7 bar, I have gotten burned way too many times by entering a trade right after a WR7 bar, and I'm just not going to do it anymore. And by a WR7 bar, I'm talking about the widest ranging day of the last 7 days. Okay, and that's what it is. You can see it's the biggest bar in terms of high to low of the last 7 days, and so I'm just gonna, you know, watch and see what continues to further set up. I mean, sometimes you see how you had this WR7 bar here, it closed below the 10, had this big bar. I think it was bigger than this one, may have been close. And then you got a little bit of follow through the downside, then you got a snapback. It just wasn't ready to go. And then you got more of a rollover here, and you got the breakdown that you could have entered off of these in here. So anyway, I'm going to continue to watch this, but Expedia was the other one. And let's see if there's any bigger picture on Expedia. It could be doing, if it does roll over and roll down, it could be doing some kind of double top in here. Indicators, RSI is now below 50. DI minus is crossing DI plus, and demand index has gone negative. So it also is getting some negatives on the indicators. And let me go look at that. And there really wasn't any divergence on the RSI. Well, that's the demand index. You're really not seeing good, strong divergence on the RSI. Not the way I'd like to see it anyway. So we'll have to evaluate kind of, I think the jury's out on this one too. Well, mainly because of the bar. I'm going to be sitting on the sidelines on that. So, all right, that's it for today. A lot to cover, and well, I tell you, never dull moment with this market. It continues to morph and continues to change. So that's the scenario. That's the best we've got for today. If you felt like the video was helpful, please share it on social media. If you're not a subscriber, subscribe. It gives you access to the Trade Ideas webpage. And I'll be back tomorrow with trade idea discussion. We'll look at what we've been in, look if there's anything that we're looking at for the coming week. All right, it's been Joe from Beyond the Chart. Have a great weekend, everyone. See you on the next video.